What if China woke up tomorrow and said, screw it, we're dumping all of America's debt? The U.S. economy? Toast. Interest rates? Skyrocketing. Your student loans? Even worse than they are now. Sounds like financial doomsday, right? Well, let's break it down, because it's way messier and weirder than you think. Imagine Uncle Sam is hanging out in his garage, broke, but somehow still ordering pizza. He's out of cash but still needs money to pay for, well, everything. So he comes up with a brilliant idea. He writes a note that says, I, the great and trustworthy me, promise to pay back $1,000 in 10 years with a little bonus on top. Signed, Future Me. Uncle Sam then goes out to his neighborhood, waves the paper around and say, who wants to lend me money? And surprise, a friendly neighbor, let's call him Mr. China, walks over with a pile of cash and says, I'll take it. Here's your $1,000. Uncle Sam hands over his IOU. Mr. China walks away, and boom, Uncle Sam's got money to buy pizza, gas, rent. That IOU is a U.S. Treasury bond. And believe it or not, that exact exchange happens between entire countries. The U.S. government borrows money by selling Treasury bonds. These are promises to pay back the loan with interest in the future. Investors buy these bonds, but one of the biggest buyers on the planet? That's China. As of late 2024, China holds around $767 billion worth of U.S. Treasury securities, according to the U.S. Department of the Treasury. That's not chump change. It's enough money to buy every NBA team 3 times over. But what happens if out of nowhere, China decides to dump all that U.S. debt? Just sell it, all at once. No warning, no chill. Sounds dramatic, right? Let's unpack it. First, let's understand what this relationship really looks like. When China sells stuff to the U.S., and let's face it, that's like everything from your iPhone parts to that LED strip light in your room, it gets paid in U.S. dollars. That means China ends up holding billions of greenbacks. Now, instead of stuffing those dollars under a mattress or turning them into crypto like a degenerate gambler, China does something smarter. It buys U.S. Treasury bonds. This way, China earns interest on those dollars while keeping them in a form that's considered super safe and liquid. It's like giving your money to a friend who always pays you back on time. But there's another reason why China buys these bonds that's a little more strategic, and honestly, kinda genius. You see, when China earns US dollars and doesn't convert them into Chinese yuan, it keeps the yuan weak. Why does that matter? Because a weaker yuan makes Chinese goods cheaper on the global market. If the yuan got stronger, American consumers would have to pay more for Chinese products. That's bad for China's economy, which thrives on exports. So by holding onto dollars and buying U.S. debt instead of converting it into yuan, China keeps its currency weak and its factories humming. It's like a sneaky economic life hack. Now let's play the what-if game. What if China wakes up tomorrow and says, we're done. Let's sell all our U.S. bonds. Like right now. Sounds simple, but it'd be chaos. First off, dumping hundreds of billions in U.S. bonds onto the global market is like trying to sell 1 million PlayStations on eBay in one day. Too much supply, not enough buyers. When there's a flood of bonds for sale, prices drop fast. And because bond prices and interest rates move in opposite directions, guess what? Interest rates shoot up. And that's bad. Like really bad. Why? Because suddenly, borrowing money becomes way more expensive in the U.S. Need a car loan? Rates just jumped. Want to buy a house? Good luck with that mortgage. Student loans? They just got even worse. Yes, somehow that's possible. Businesses would also pay more to borrow, which slows down investment, hiring, expansion, you name it. The U.S. economy would feel like it just got slapped across the face with a frozen tuna. But that's just part one of the disaster. The U.S. government itself would take a huge hit. Remember, the government borrows constantly. Almost like a teen with access to their dad's credit card. If interest rates jump, it suddenly costs a lot more for the U.S. to borrow. That means more money goes toward paying interest and less toward schools, infrastructure, defense, and your favorite national park. So, does that mean China has the U.S. by the financial throat? Not exactly. Here's the twist. Selling all those bonds would hurt China too. A lot. First, the value of those bonds would crash if they tried to sell them all at once. So China would basically be lighting its own money on fire. Imagine trying to sell your used car by yelling, half price, while everyone watches you panic. Buyers would lowball you, and you'd walk away with way less than it's worth. Second, Crashing the U.S. economy isn't great when your own economy depends on Americans buying your stuff. A weaker U.S. economy equals fewer people buying on Amazon, equals fewer Chinese factories working overtime, equals fewer jobs in China. Not exactly a win-win. And third, if China dumps U.S. bonds, other countries might panic and start selling too. That triggers a global chain reaction where bond markets become unstable, currencies fluctuate wildly, and everyone loses trust in what's supposed to be the world's safest investment. That trust is the backbone of the global financial system. Without it, welcome to Financial Mad Max. Now let's pull back a bit. Could China gradually sell its U.S. bonds to reduce its reliance on the dollar? Sure. In fact, they've been doing that slowly over the years, trimming down their holdings while investing more in gold, other currencies, and their own digital yuan. But suddenly, dumping everything? That's like torching your house because the kitchen smells funny. So no, China's probably not going to dump all its U.S. debt tomorrow. It'd be like shooting your own wallet. But the fact that we even need to ask this question tells you something important. The world is deeply interconnected, and the U.S.-China financial relationship is like a high-stakes version of It's Complicated. Think of it this way. China is like a landlord who gave the U.S. a massive loan and is collecting rent every month in the form of interest. If the landlord suddenly decided to kick out the tenant and burn the lease, both the tenant and the landlord would lose money, stability, and peace of mind. It's a tense balance, one where trust, leverage, and self-interest keep things stable, for now. So the next time you hear a politician yell, "China owns our debt," like it's a horror movie, just remember, it's more like an awkward roommate situation. One needs the rent, the other needs the place to stay. And if either one flips out, everyone in the building is in trouble. And if you want to actually do something smart with your money, instead of panic about China dumping debt, watch this, The Beginner's Guide to the Stock Market. I'll break it all down with zero jargon, zero BS. See you there.